Welcome back to Stocklabs, another market recap. We just finished the second week of March on the 11th, and it was kind of another sloppy week for the market overall. I mean, we kind of expected that from last week just because we're not really seeing anything that's, the behavior of the market is not changing at all. It's kind of just, you get these. You get these up days, or maybe you get two up days in a row, and then the bids just disappear. The market falls apart. So we kind of closed I think near the weekly lows, but not quite on them. If we check our index performance, it was pretty forgettable. I mean, IWM was the outperformer. It was down 1%. So that sort of tells you how it all went. Nasdaq, pretty poor, down almost 4%. Bonds, same thing. So, I mean, these, for a long time, the bonds and Nasdaq have sort of been in the same sort of trade, sort of the risk parity trade. And the bond market has somewhat stabilized, but it's been volatile, so it's hard to run those kind of strategies when you have that much volatility in that asset class. S&P 500 down 2.8%, and the Dow down 1.8%. So, I mean, not quite crash numbers for those two, but I mean, solid down, decisively down weeks, gold, up 0.8, which is green out of all these, but is not anything crazy. Even though it's been trending well. So, I mean, if you've been sitting in gold, then you've been managing okay. As far as our breadth from an industry perspective, okay, materials were up again. Not a huge up week, but I mean, after such a massive run, you kind of happy that they hold the gains instead of, making like a steep pullback. It makes it easier to sort of sit in the positions and ride the trend. Technology down 3%, services down 2%. Consumer down 2.5%. Even utilities a little soft. The utilities had been a little stronger recently, but yeah, soft week from them. Financials have been doing pretty poorly. You look at stocks like JP Morgan; they're just like in free fall. So whatever's going on there could be recession risk or whatever. The banks are no longer sort of part of the part of the risk on trade. The only stuff that's maintaining its bull market sort of are the materials. I mean, for a while the financials were sort of following these guys along, but that is long gone. For our subsectors, okay, top performers: solar, nuclear, alt energy. Okay, so this is like a derivative of just the oil bull market, because it's like, the mentality is that, investments have to come into these spaces just based on, the amount of pressure the oil market is putting on countries' energy mixes and just the infrastructure that they have. I mean, they don't have the infrastructure built out for all this stuff. So if investments got to be made in these spaces, then people run the stocks. But we'll see if something like that sticks. Okay, construction up, shipping up, silver, EVs. Okay, oil and gas, obviously, gold, and yeah, everything else kind of falls by the wayside. But we did have 8 sectors up. I just miscounted. 7 sectors up 5% or more. Although they're all part of the construction, not so much, but they're all part of the sort of um, commodity boom, I guess, if you want to call it that. Okay, down for the week. Electronic stores. Okay, I said I mentioned commodity boom, and then we have aluminum down, 11% on the week, um, which is funny. But yeah, the commodities overall are doing great. Chinese burritos. Okay, for a while, this last year, this was on here all the time. It was a worst performing sector. It never really improved. It's just sort of been maintaining that downtrend, and now you saw a big flush this week. I didn't see what the news was on it, but I mean, I saw stocks like I don't know, like DD and DD. I think was down 40% or 45% on Friday, which is kind of hilarious. I mean, this was it's the Chinese Uber that you can't miss on it, and it's gone nothing but down ever since it came out. I mean, it just and then you have like Alibaba down, down a bunch. Actually, let's just open this up. Or I'm not going to do that. I messed this up. Where was it? Sorry. Yeah, let's see week to date in here. Let's get the tiny ones out of here. Okay, so if the Chinese stock was over $1 billion cap, there was one in the entire market that was even up for the week. Okay, down for the week, 52% for DD, RLX 43%. I mean, come on. IQ, this used to be a hot stock. I mean, I think it used to trade up in the 20s and 30s. I mean, it's $2 now, $3. I mean, what? This is like Beak, same thing. What else? Billy was, $100 stock at some point, if I remember correctly. We have to look pretty far back for it. Yeah, I mean, look at this. This is ridiculous. $150 stock is $20 now. So I mean, if you're a China bull, I mean, you're obviously in a lot of pain, but you're gonna. I mean, I don't know if you have some sort of knowledge on China, then I mean, you might just have to buy some of these, but I'm not doing it because I just don't buy Chinese stuff. Which in times like these keeps you out of trouble. But if you have some greater insight, sure, go for it. What else was poorly? Poorly. Uh, okay, tobacco, medical instruments, appliances, toys, whatever. Okay, we've got a lot of sectors. I mean, not a ton, but a decent amount of sectors down 5%. So this is 1, 2, 3, 4, 5, 6. So we've got 19 sectors on down 5% or more for the week. And I mean, so you could see the breadth was pretty poor overall, whether it's by, on these bigger sections of the market or on a finer grained look. We'll sort through things by market cap too, as always, just to see if there's any insight from that. 1 to 5 billion down 1%. That's better than I would have expected it to be. Although IWM was down, what was it, 1%? Almost 1%. So that's kind of in line. Then 5 to 10 billion. Okay, down 2.5%. So that's a pretty big drop off. And then large caps down 2.7. Okay, this is more market perform. And mega caps down 3%. And terra caps down 2%. So kind of in that market perform range. Yeah, I mean, looks like just broad-based liquidation across the board. I mean, that this small caps stuck out as outperformers, but they were still down. I mean, it was just, people weren't selling them as hard as they were selling everything else. So yeah, not great from a breadth perspective, no matter sort of which way you look at it. Um, let's see, intelligence for this week. So again, this is about the third week in a row that intelligence is not picking out any. I mean, it has nail here for the home builders. So I mean, if you like the homies, then maybe you take a shot on this. But the fact that just nothing is showing up on these screens anymore kind of just tells you that you may have to wait quite a while to find levels where the market is getting more attractive. So um, I will flip this around just for curiosity's sake. What's supposed to be down? Okay, cloud supposed to take another leg down this week. Blockchain. I don't know what's in this ETF. I'll look it up after. But okay, blockchain. I mean, these two trade together. I mean, for instance, Bitcoin and the Nasdaq. They just follow each other around. So makes sense that both of these are on here as um, bearish this week together. And then the bear energy ETF is on here, which is bullish the actual sector for energy. So, yeah, I mean, it looks like a lot more of the same. You're going to get liquidations from, a lot of those old runner sectors. I mean, tech was a huge winner for a long time, and now can't catch a bid. So it's not looking like that's going to end this week. We do have, I mean, the only chance of maybe some of this, maybe some improvement happening is we are very close to oversold on the market. Um, we haven't had a proper oversold signal in a couple months. So this is the end of January, mid to late January. We had some oversold signals that produced decent bounces. Same thing on 12 months. So this hybrid algo, we need 2.21 for 12 month or 2.22, basically the same thing on 6 month. The statistics on these signals have gotten quite a bit weaker recently, or in the last, the last maybe 6 months. So the bounces that are coming in aren't going as hard as they used to. So you can see here, let's see, 6 month. Okay, so a 6 month oversold signal on hybrid, which is what we're sort of paying attention to. This used to be, this distribution of average returns used to be somewhere up in the, you would have 2% by day 5, and it would be, maybe 3% by day 10. Whereas now everything is a little more suppressed. The rally is not as intense coming off of these signals, but we are still getting some type of rally off of these signals. And same thing for 12 month. I mean, if we get 12-month signal, expect some sort of rally, and then yeah, you might just have to sell. You might just have to sell it again. But you can use these signals to cover shorts or whatever, and make sure you're not getting snagged in some bear market rally. But for now, yeah, action remains sort of the same. Looking forward to, or not looking forward to it, but expecting some of the same for this week. We do have, I think the Fed maybe meets on in the coming week. It could be an inflection point for the market one way or another, or it could produce, sort of a new impulse to the downside, which would, really just exacerbate a lot of people's pain. But yeah, we'll see how it goes. Hope everyone is, at least managing during sort of the sell-off here that we've been having for a while. just taking care of your risk and making sure you're not doing anything stupid or anything like that. But yeah, expect more of the same pattern this week, and we'll get back to it next week and see if anything's changed. Talk to you guys later.